Chapter 3. Fire and Loss of Profits. Fire Insurance. 1. General insurance business is traditionally divided into fire, marine, and miscellaneous classes. It is relevant to consider the definitions provided in Section 2 of the Insurance Act, 1938. General insurance business means fire, marine, or miscellaneous insurance business, whether carried on singly or in combination with one or more of them. Fire insurance business means the business of affecting, otherwise than incidentally to some other class of insurance business, contracts of insurance against loss by or incidental to fire or other occurrence customarily included among the risks insured against in fire insurance policies. Marine insurance business means the business of effecting contracts of insurance upon vessels of any descriptions, including cargoes, freights, and other interests which may be legally insured, in or relation to such vessels, cargoes and freights, goods, wares, merchandise, and property of whatever description insured for any transit by land or water, or both, whether or not including warehouse risks or similar risks in addition or as incidental to such transit, and includes any other risks customarily included among the risks insured against in marine insurance policies. Miscellaneous insurance business means the business of effecting contracts of insurance which is not principally or wholly of any kind or kinds included in Clause 6A and 13A. Note: Clauses 6A and 13A define fire and marine insurance respectively. 2. According to these definitions, all classes of insurance which do not fall under fire or marine insurance are included in miscellaneous insurance, for example, motor insurance, legal liability insurance, burglary insurance, personal accident insurance, engineering insurance, aviation insurance, etc. 3. A modern classification of insurance is based on the subject matter of insurance as follows: A. Insurance of property, e.g., fire insurance, marine insurance, etc. B. Insurance of profits, e.g., consequential loss, fire insurance. C. Insurance of liability, e.g., public liability insurance, employer's liability insurance, etc. D. Insurance of person, e.g., personal accident insurance. 4. For the purpose of licensing of surveyors and loss assessors, 7 classes of insurance are recognized under the IRDA regulations. Therefore, an outline of the types of covers available in these 7 classes was fire, loss of profits, fire, marine cargo, marine hull, motor, engineering, and miscellaneous insurance is provided. Fire insurance. 5. The following are examples of insurable property under fire insurance: buildings, electrical installation in buildings, contents of buildings such as machinery, plant and equipment, accessories, etc. Goods, raw materials, in process, semi-finished, finished, packing materials, etc. In factories, godowns, etc. Goods in the open. Contents in the dwellings, shops, hotels, etc. Furniture, fixture and fittings. Pipelines, including contents located inside or outside the compound of a manufacturing risk, etc. Utilities associated with industrial manufacturing risks, e.g., water and effluent treatment plant, boiler house, etc. 6. The basic cover is provided by the Standard Fire and Special Perils Policy against the following perils: fire, lightning, explosion, implosion, aircraft damage, riot, strike and malicious damage, storm, cyclone, typhoon, tempest, hurricane, tornado, flood and inundation, subsidence and landslide including rockslide, bursting and/or overflowing of water tanks, apparatus and pipes, missile testing operations, leakage from automatic sprinkler installation, bush fire, impact damage by rail, road, vehicle or animal. Exclusions. 6a. There are specific exclusions under the perils covered and general exclusions applicable to the whole policy. Examples of specific exclusions are: A. Spontaneous combustion under fire. B. Damage to boilers other than domestic resulting from their own explosion. Implosion under explosion, C. Damage by pressure waves, aircraft damage. D. Terrorism under RSMD. A. Coastal or river erosion under subsidence. F. Damage caused by repairs to building or sprinkler installation under sprinkler. Leakage. G. Forest fire under bush fire. H. Impact damage by railroad vehicle owned by the insured or occupier of premises or their employees. 6b. The general exclusions are as follows. 1. First 5% of each and every claim arising out of act of God, perils such as lightning, STFI, subsidence, landslide and rockslide, minimum 10,000 rupees, and the first 10,000 rupees for loss from other perils. 2. War, civil war and kindred perils. 3. Nuclear risks. 4. Pollution or contamination excluding A. Pollution or contamination which itself results from a peril hereby insured against. B. Any peril hereby insured against which itself results from pollution or contamination. 5. Loss or damage unless otherwise expressly stated in the policy, to bullion or unset precious stones. Curios or works of art for an amount exceeding 10,000 rupees per manuscripts, plans, drawings, securities, obligations or documents of any kind, stamps, coins or paper money, checks, books of accounts, or other business books. Computer system records. Explosives. Note, these properties may be covered subject to special terms and conditions. 6. Loss or damage to the stocks in cold storage premises caused by change of temperature. However, deterioration of stocks in cold storage premises due to power failure following damage due to an insured peril may be covered by endorsement. 7. Damage to any electrical machine etc. by short-circuiting or other specified electrical risks, but resulting fire damage to other machines is covered. These electrical risks can be covered under engineering policy, machinery breakdown. 8. Architects etc. fees and debris removal costs in excess of 3% and 1% of the claim amount respectively. 9. Consequential losses. 10. Spoilage from the retardation or interruption or cessation of any process or operation caused by any of the perils covered. 11. Earthquake. 12. Insured property if removed to any building or place other than the insured premises, except machinery temporarily removed for repairs, etc., for a period not exceeding 60 days. 13. Theft during or after the occurrence of any insured peril. Note, add-on cover is available for 10, 11, and 12. 7. The basic cover can be extended, on payment of additional premium, to include what are known as add-on covers. These are architects, surveyors and consulting engineers fees in excess of 3% of claim amount. Note, cover up to 3% is provided by standard policy. Removal of debris in excess of 1% of claim amount. Note, cover up to 1% is provided by the standard policy. Forest fire. Earthquake, fire and shocked spontaneous combustion. Deterioration of stocks in cold storage premises due to A. Accidental power failure consequent to damage at the premises of power station due to an insured peril. B. Change in temperature arising out of loss or damage to the cold storage machinery in the insured premises due to operation of insured peril. Impact damage due to insured zone railroad vehicles, forklifts, cranes, stackers and the like, and articles dropped therefrom. Note, this covers an exclusion in impact damage under the standard policy. Spoilage, material damage. Loss or damage to stock in process or machinery due to interruption of process caused by an insured peril. Leakage and contamination. Physical loss of oil chemical by accidental leakage from its container and accidental contamination by contact with foreign matter. Temporary removal. Cover for stocks temporarily removed for processing, etc. Up to 10% of sum insured. Additions, alterations, extensions. Cover extended to buildings, plant, etc., which the insured may erect or acquire during the period of insurance. Startup expenses. Cover for startup costs incurred consequent upon loss or damage covered by the policy. Loss of rent. The extension applies if the insured building is unfit for occupation because of damage by an insured peril. Additional expenses for alternate accommodation. Extension covers rent for alternate accommodation when original premises are untenantable as a result of an insured peril. Extension available to tenants and owner-occupants only. Special policies. 8. These are designed to cover special requirements of the insured. The standard fire policy is used but with attachment of clauses. Reinstatement value policy. 9. This is the standard fire policy with the reinstatement value clause attached to it. The clause provides that in the event of loss, the amount payable is the cost of reinstating property of the same kind or type, by new property. 10. This basis of settlement differs from the basis under the fire policy where the losses are settled on the basis of market value, i.e., making deductions for depreciation, etc. 11. Under reinstatement value policy, it is possible to recover not the depreciated value of the building or machinery, but the cost of replacement of the damaged property by new property of the same kind. 12. If, due to technical improvements, the replaced machinery is better than the damaged machinery, e.g., output is increased with less consumption of power, the insured is obliged to bear a part of the cost of the new machinery to ensure that he does not derive any undue benefits. Thus, the principle of indemnity is still observed. 13. Under the standard fire policy, market value is the sum insured. Under this policy, new reinstatement or new replacement value is the sum insured. Declaration policies. 14. Stocks which are subject to frequent fluctuations in quantity present a problem for insurance. The sum insured under the fire policy will have to be increased or decreased by endorsement with consequent adjustment of premium, extra or refund, as the case may be. This would mean additional administrative work both for the insurer and the insured. 15. The problem is solved by the issue of a declaration policy, which is in fact, the standard fire policy with a declaration clause attached to it. The insured can fix a provisional sum insured which represents the highest value of stocks at any point of time during the policy period. The premium paid on this sum insured is provisional and is subject to adjustment on expiry of the period of insurance. 16. The insured agrees to declare to the company in writing the value of his stocks other than retail on a monthly basis. On the expiry of each period of insurance, the premium is calculated at the rate applicable on the average sum insured, namely, the total of the values declared or deemed to have been declared divided by the number of declarations deemed to have been made. If the resultant premium is less than the provisional premium, the difference shall be repaid to the insured, but such repayment shall not exceed 50% of the provisional premium. 17. The minimum sum insured under this policy is 1 crore rupees in one or more locations and not less than 25 lakh rupees in at least one of these locations. Floating policy. 18. This policy covers in one sum insured stocks stored in different specified godowns. This policy is useful when the insured is able to give the total value of his stocks in various godowns but not separate value in each godown. 19. The insured is required to have a good internal audit and accounting procedure under which the total amount at risk in the locations can be established at any particular time if required. Industrial all risks policy. 20. All industrial risks other than risks rateable under petrochemical tariff, having overall sum insured of 100 crore rupees and above in one or more locations in India shall be eligible for industrial all risks policy. 21. Cover granted under the policy is Section I, Material Damage and Section 2, Business Interruption. The cover in its widest form will include the following perils covers: A. Fire and all special perils. B. Burglary. C. Machinery breakdown, boiler explosion, electronic equipment insurance. D. Business interruption, fire and all special perils. A. Machinery loss of profit cover, this is optional. Petrochemical risks. 22. These risks are covered in fire insurance as per the provisions of petrochemical tariff which apply to plant using hydrocarbon, natural gas as basic raw material. This tariff prescribes separate rates of premium, warranties, etc. Loss of profits, fire insurance. 23. Fire insurance is designed to provide protection in respect of loss of or damage to buildings, machinery, furniture and fittings, goods and merchandise, etc. by fire and allied perils. The insurance affords cover for material damage. However, an indemnity for the material damage does not provide complete protection to the insured, who may also suffer trading losses due to total or partial stoppage of the business. The purpose of consequential loss or loss of profits insurance, also known as business interruption insurance, is, therefore, to make good some of these losses. 24. Whereas the subject matter of the insurance is material property, The subject matter of profits insurance is the business of insured, that is, the earning capacity of the property. Fire insurance is concerned with the capital loss, i.e., loss of property. Profit insurance is concerned with the revenue loss, i.e., trading loss due to interruption of business as a result of an insured peril. 25. Basis of loss of profits insurance. The profits of a business are related to the total income or turnover. If this is stopped or reduced, the profits are affected. Therefore, loss of profits is determined and measured with reference to reduction in turnover, and this is the basis usually adopted in profits insurance. 26. Turnover is defined in the profits policy as the money paid or payable to the insured for goods sold and delivered and for services rendered in the course of the business at the premises. 27. Turnover consists of the following three elements. A. Variable charges. These are expenses incurred in producing the goods, e.g., purchase of raw materials, wages, etc., which vary in amount in direct proportion to the volume of business transacted. B. Standing charges. These expenses are fixed in amount irrespective of the volume of the business transacted, which cannot be reduced in direct proportion to any reduction of business, e.g., taxes, bank interest, salaries to permanent staff, etc. C. Net profit. This is turnover minus variable and standing charges. Gross profit, standing charges, and net profit together constitute the gross profit of the business. 28. When the turnover is reduced, the variable expenses may also be reduced in the same proportion, in which case the insured suffers no loss on this account. But the standing charges do not reduce in the same proportion, and net profit too will be affected. 29. The policy provides indemnity for loss of gross profit, net profit plus insured standing charges. In addition, the policy indemnifies the increased cost of working, i.e., the abnormal expenditure incurred by the insured to keep the business, as far as possible, at its normal level. Examples of such expenditure are rent for temporary premises, payment of overtime, hire of machinery, subcontracting, etc. Indemnity period. 30. The profits policy provides indemnity in respect of loss of gross profits during the indemnity period which is selected by the insured. The indemnity period chosen by the insured may vary from 3 months to 3 years. 31. The choice of the indemnity period would be mainly influenced by the time that would be taken for reinstatement of the building or replacement of machinery, stocks, etc. Other factors relevant are the nature of the business, alternative facilities available for carrying on business, etc. It is in the interest of the insured to select an indemnity period which is of such duration that it will represent the longest period during which his business could be affected following a serious fire. 32. The indemnity period is to be distinguished from the period of insurance, which is usually a year. The insured peril must occur during the period of insurance, and the indemnity period which commences then may well extend beyond the expiry date of insurance. The sum insured. 33. The sum insured is to be fixed by the insured. As the indemnity provided by the policy is in respect of loss of gross profits for the indemnity period, naturally the sum insured should represent the gross profits of the indemnity period selected. 34. Where the indemnity period is 12 months or less, the sum insured should be the annual amount of the gross profit, i.e., the annual amount of the net profit and the insured standing charges. Where the indemnity period is 24 months, the sum insured should represent twice the annual gross profit, and so on. 35. The sum insured should be computed from the insured's accounts, e.g., the trading and profit and loss accounts. 36. The first step is to identify what are the standing charges in the insured's business. These have to be individually specified in the proposal form as insured standing charges. What is a standing charge has to be decided by the insured in the context of his business. The next step is to ascertain the net profit of the business. 37. The total of net profit and the amount of insured standing charges is the gross profit and the sum insured under the policy. This figure, which is based on previous financial year's accounts, should be adjusted usually upwards, to reflect the projected future gross profit expected to be earned. 38. Examples of standing charges: interest on loans, bank overdrafts and debentures, including brokerage on deposits, rent rates and taxes. Tax on profit is included in net profit. Directors' fees and remuneration. legal, auditing and other professional fees and expenses, insurance premiums, advertising and publicity expenses, conveyance, stationery, postage, telephone, telex, telegram, teleprinter expenses, motor car expenses, office and general establishment expenses, dividends on preference shares, heating and lighting, power charges, water charges, other than for manufacturing purposes, salaries to permanent staff including employees' state insurance contributions, provident fund, superannuation, family pension, gratuity, perquisites, benefits, welfare, etc., wages including employees' state insurance contributions, miscellaneous standing charges not exceeding 5% of the total amount of the aforesaid insured standing charges. Note: the above list is illustrative and not exhaustive. Perils covered. 39. The perils covered under the policy are the same as those covered under the standard fire and special perils policy. On payment of additional premium, the policy can be extended to include add-on covers included in the fire policy, e.g., earthquake, spontaneous combustion, accidental failure of public electricity, gas, water supply, etc. Appropriate endorsements are attached to the policy. Material damage clause. 40. This is a special feature of the LOP policy. The insured must maintain a material damage policy and claim under LOP policy is payable only if the material damage claim is payable. 41. The reasons for this proviso are, if any warranty or condition is breached under the fire policy, it automatically affects the LOP policy. Secondly, independent investigation of cause of loss is not necessary, as it is done under the fire policy. As claim for material damage is paid, to that extent, interruption of business will be reduced, with early restoration of damaged property. Extensions of the policy. On payment of additional premium, extensions available are insured's property at other locations. 42. Owing to lack of space at their own premises, a firm may find it necessary to store commodities at different situations not in their own occupation. Extension may be granted to cover interruption of business in consequence of damage to insured's property at locations other than the one to which the policy applies. Such locations have to be specified in the policy, and a limit, expressed as a percentage of the sum insured, is placed on the amount payable in respect of loss at any one location. Suppliers and customers' premises. 43. There are many firms who are dependent on the supply of raw materials, semi-finished goods and components from other producers. Damage by insured perils at suppliers' premises may thus affect the production at the insured's premises. 44. The relevant endorsement provides that loss is insured by the policy resulting from interruption of or interference with the business in consequence of damage, as within defined to property at the supplier's premises shall be deemed to be loss resulting from damage to property used by the insured at the premises. 45. Similar extension can be granted on customers' premises. The cover is against consequential loss to the insured arising out of named customers not taking delivery of the products exclusively manufactured for them as a result of operation of the insured perils at their premises. Insurance of wages. 46. The basic policy covers gross profits, which means net profit plus insured standing charges. So far as salaries are concerned, it is generally accepted that they should be insured as a standing charge for the full indemnity period selected for the gross profit item. 47. For wages, however, different considerations may apply, according to the circumstances of the particular business. The inclusion of all wages is the simplest method, especially when the relative cost is not heavy, as in a highly mechanized factory. But in a labor-intensive industry, this may be expensive as the premium is calculated on the sum insured representing gross profit. Therefore, various methods of insuring wages have been devised bearing in mind adequacy of cover and reasonable cost of premium. Examples of the methods. 48. A. Insurance for the full indemnity period, by inclusion in gross profit is a standing charge of wages. I to employees in specified categories, or E to the extent of % of the total wage roll, or E to the extent of a stated maximum amount. B. Insurance for a shorter indemnity period of wages not insured under I.E. or E of above the sum insured representing the annual amount of such wages, or if the indemnity period be over 12 months, the amount for the period. This insurance supplements the cover under above. C. The third method is known as period basis or pro rata basis. Insurance is for a shorter indemnity period of wages not insured under A or B above. The sum insured represents wages for the selected indemnity period only. Under this method, wages are covered for periods of 4 weeks, 8 weeks, 12 weeks, 10 weeks, and so on. D. Dual basis of insurance. This is a modern method of wages insurance and is becoming increasingly popular. Under the scheme, wages are entirely removed from the gross profit cover and are insured as a separate item. All wages are covered in one item and for one amount, for an initial period, and a proportion only of wages for the remainder of the indemnity period. Example. Full wages insured for first 4, or 8 or 13 or 26 weeks, and so on. Percentage of the wages insured for the remainder of the indemnity period may be 10, 15, 20, 25, 33 and a third, 50, 66 and 2/3 or 75. 49. This method has several advantages, especially to firms with a large wage bill. It provides adequate and flexible cover at a reasonable cost of premium. Layoff retrenchment compensation. 50. Under the Industrial Disputes Act 1947, a payment has to be made by employers as per the basis incorporated in the Act to such workers as are laid off and/or retrenched in the event of closure of a manufacturing concern due to circumstances beyond the control of the employers, such as fire, or the operation of any other insured peril. The cover provides as follows. 51. The insurance under this item is limited to the amount which the insured shall become legally liable to pay and shall pay to the employees as layoff and/or retrenchment compensation under the provisions of the Industrial Disputes Act, 1947 and all subsequent amendments thereto. Auditor's fees. 52. Under a condition of the policy, the insured is required at his own expense to produce books of account and other documentary evidence to support his claim. The insured will usually ask his auditors to produce the information required. It is also convenient for the surveyors to work in conjunction with the auditors, thus saving a good deal of time and unnecessary work to the insured. 53. The auditor fees for this work can be insured. These fees are to be distinguished from normal audit fees paid in the ordinary course of business and which are insured as standing charge. The sum insured for auditors' fees is to be separately fixed by the insured. Special policies. 54. The policy described above relates to manufacturing risks. Where services are provided, separate policies are available. Revenue policies. 55. Revenue policies are appropriate for cases where the undertaking provides a service as opposed to a manufacturing business where the raw material, variable charge would be the biggest single item in the accounts. These policies are used for clubs, hotels, private schools, private hospitals and nursing homes, etc. 56. The policy broadly follows the pattern of the turnover policy, but turnover is replaced by gross revenue, which is defined in the policy as the money paid or payable to the insured for services rendered in the course of the business at the premises. 57. The sum insured as the gross revenue and the amount payable under the policy is A. The amount by which the gross revenue during the indemnity period falls short of the standard gross revenue. Whole revenue is insured. B. Additional expenditure incurred for avoiding or diminishing the loss of gross revenue. Gross fees policy. 58. This policy is suitable for professional persons such as solicitors, chartered accountants, etc. The policy is similar to the revenue policy but with additional items of coverage. The gross fees is defined the policy as the money paid or payable to the insured for services rendered in course of the business of the insured. 59. The specification provides for 3 items of coverage. Sum insured. 1. On gross fees hours. 2. On additional expenditure hours. 3. On legal, clerical and other charges hours. Note, items 2 and 3 are additional under this policy. 60. The insurance under item 1 is in respect of A. Loss of gross fees, the amount by which gross fees earned during the indemnity period falls short of the standard gross fees. B. Increased cost of working. 61. The insurance under Item 2 is limited to such further additional expenditure beyond that recoverable under Item 1b, in connection with the fitting up of temporary offices, increased rent, rates and taxes, lighting, heating and insurance thereof, removal costs and incidental expenses. 62. The insurance Item 3 is limited to legal, clerical and other charges incurred in the replacement of deeds, documents, manuscripts, plans, books of account, card indexes, etc. Losses not payable. A. Under insurance against property damage under fire policies. B. Depreciation of undamaged stock after a fire. C. Failure to recover book debts owing to destruction of records. D. Loss of goodwill. A. Fines and penalties payable due to delayed fulfillment or cancellation of sale service contract.